Hey, and welcome. The world of finance can feel, well, incredibly complicated, right? It's this giant web of big names and big numbers moving trillions of dollars around the world every single second. But what if we could actually pull back the curtain and see how it all works? Well, that's exactly what we're going to do today. We are going to trace the secret path your money takes from the moment it hits your bank account to the global markets. Let's dive in.
I mean, really, have you ever stopped to think about it? That number that shows up on your screen, it doesn't just sit there. No way. It goes on this wild journey through a massive interconnected system. So today, we're going to follow a single dollar and uncover the secret life of your money.
All right, so where does our money's journey begin? Well, it starts at the top with the institutions that literally write the rules of the game for everyone else. Our first stop, the central banks. Yeah, you can pretty much think of them as the puppet masters of the entire economy. We're talking about places like the US Federal Reserve or the Bank of England. These guys have the ultimate power to decide how much money is out there and, crucially, how expensive it is to borrow that money. So how do they actually pull the strings? Well, they've got two main tools, and it's kind of like driving a car. When the economy is sluggish, they hit the gas pedal. That's expansionary policy. They'll cut interest rates, make borrowing super cheap, and just pump money into the system to get things growing. But if the economy gets too hot and prices start to soar, they slam on the brakes. That's contractionary policy. They raise rates, make borrowing more expensive, and try to cool things down to fight inflation. Gas and brakes, that's the game. Okay. So the puppet masters have set the rules. Now let's follow the money to a place we all know very, very well, our local bank. This is really where your money's journey gets going.
Right, so if central banks are the puppet masters, then commercial banks, your JP Morgans, your Bank of Americas, they are the real workhorses of the system. Their job at its core is actually pretty simple. They're like professional matchmakers for money, connecting the people who have it with the people who need it.
And this breaks it down perfectly. It all starts with you. You deposit your paycheck, that's step one. The bank then takes your money and pools it with everyone else's cash. And then, step three, it lends that big pool of money out to someone who wants to buy a house or a small business that wants to expand. It's what keeps money from just sitting still. It keeps it flowing. But hang on, because here is the truly mind-blowing part. Banks don't just lend out the money they have sitting in a vault. When they issue a loan, they actually create new money out of thin air. That's right, the loan for your neighbor's new car? Poof, it was literally created the moment the loan was approved. This incredible ability to expand the money supply makes commercial banks the true beating heart of our economy. Okay, so we know your money moves through banks. But for a lot of us, a slice of our paycheck goes somewhere else entirely, to the absolute giants who are investing for our future. Just look at that number, $60 trillion. Let that sink in for a second. That is how much money pension funds manage across the globe. These massive institutions are built to make sure you have money when you retire. And because of their sheer size, they are one of the most powerful forces in all of finance. And believe me, they do not just let that $60 trillion sit in a savings account. No, they invest it in, well, everything. Stocks, bonds, real estate, even entire city landmarks like Hudson Yards in New York. So when you put money into your retirement plan, a tiny piece of it might be helping to build a skyscraper or even funding the next big tech unicorn. They are a huge source of cash for all the other players in the game. So what if you're not a multi-trillion-dollar pension fund? What about the rest of us? Well, that's where mutual funds come in, from places like Vanguard and Fidelity. You can think of them as investment clubs for regular folks. They let all of us pool our money together to buy a piece of a huge, diverse portfolio that we could never afford on our own. All right, let's shift gears a bit. We've seen the rule makers and the workhorses. Now it's time to meet the high-stakes gamblers and the house flippers of the financial world. So what's the difference here? It really all comes down to access. Mutual funds, they're for everybody. Hedge funds? Nope. That is an exclusive velvet rope club for the ultra-wealthy. And why is that? It's because they operate with way fewer rules, which lets them make incredibly risky, high-stakes bets that are just totally off-limits to you and me. Next up, we've got private equity firms, or PE firms. And honestly, the best way to think about them is as house flippers, but for entire companies. They swoop in, buy a company, try to fix it up real quick to boost short-term profits, and then sell it a few years later for a massive payday.
And this is their classic move, the leveraged buyout, or LBO. Now pay close attention to steps 2 and 3, because this is the really clever and sometimes brutal part. They buy the company using mostly borrowed money, and then they immediately make the company they just bought responsible for paying back that debt. It's a genius way to minimize their own risk, but it can be devastating for the company itself. Just look at what happened to Toys R Us. It was loaded with $5 billion in debt from its LBO and eventually went bankrupt.
And then we have the VCs, the venture capitalists. These guys are the ultimate gamblers of the financial world. They basically spray money across hundreds of tiny, brand new startups, and they fully expect most of them to completely fail. They're just hoping, praying that one of them, becomes the next big thing. And this chart shows their business model perfectly. It's called the power law. As you can see, a staggering 90% of their bets just fizzle out, they fail. But the absolutely astronomical returns from that tiny 3% of massive winners, think of Peter Thiel's early $500,000 investment in Facebook turning into over $1 billion, well, that more than pays for all the other losses. Okay, so we've got all these players buying, selling, investing, and gambling. But who puts the really big deals together? Who connects the giant corporations with those giant pools of money we talked about? That would be the investment banks. Think of the big names, like Goldman Sachs and Morgan Stanley. You can think of them as the ultimate corporate matchmakers of Wall Street. Their entire job is to facilitate those billion-dollar handshakes that really shape our entire economy. And they have a few key tools to do it. First, they take companies public with an IPO, an initial public offering, like when they helped Facebook raise $16 billion in a single day. They also manage mergers and acquisitions, when one huge company buys another. And finally, they help businesses raise massive amounts of cash by selling stocks and bonds to investors. And we have to give a quick but really important shout out to insurance companies. We pay them a premium to protect us from risk, right? Well, they don't just stick that money under a mattress. Your monthly car insurance payment doesn't just sit in a vault. It gets invested right back into the financial system, making insurance companies another quiet but absolutely enormous financial player. So when you step back and look at the whole picture, you can really see it. The financial system is one giant, interconnected machine. The central banks control the speed. The commercial banks circulate the fuel. And all these other players, the pension funds, the VCs, the investment banks, they're all the intricate gears, all working together to create, multiply, and move money around the world. And here's the most important takeaway. This whole massive global system, it starts with you. It's fueled by your paycheck, your savings account, your retirement plan. So now that you've seen the secret journey your money takes, now that you know where it goes, how does that change the way you see your role in this incredible machine?